Good morning. I'm Ryan Lehman, and this is Markets in a Minute for the week of June 15th. Before addressing the elephant in the room, SpaceX, let's first touch on stock market volatility last week, and in particular, the tech sector. So it was a bit of a wild ride, beginning with a big bounce back following the prior Friday sell-off, only to see pressure continue midweek. The big drivers here have been a few things. So first, we've seen elevated individual stock volatility with a number of chip names moving by double digits in a single trading session. The key fundamental factor, though, has been concerns over CapEx spending and the potential future returns on these investments. Oracle was a key example of this last week. Their stock dropped by its most in 6 months following their most recent earnings report, where they announced quarterly CapEx of around $16.5 billion, bringing their annual spend to roughly $55 billion, exceeding even their own expectation of around 50. With valuations and technicals at such lofty levels for many of these AI names, this is a trend that is likely to continue into the following quarters. Now on to SpaceX, one of the most highly anticipated and highly valued IPOs in history. Shares hit the open market just before noon on Friday morning. They had an initial offering price of $135 per share, which valued the company at upwards of $2 trillion, giving them an eye-watering multiple of 93 times revenue. Now, in comparison, NVIDIA currently trades around 25x, Tesla trades at 16x, and Amazon trades at 4x. As expected, the price rose above the offering, reaching around $160 in the first few minutes of trading. This represents a 20% premium to the offer price. Needless to say, this puts a great deal of pressure on the company going forward, as pretty extreme revenue and profit growth is going to be necessary to justify the current price level. Now, on the index inclusion front, which will impact many ETFs held by retail investors, it is expected to be added to most major indices over the next 1 to 3 weeks. However, the weight will likely be less impactful than many expect. The major index providers weight companies based on free float rather than total market cap. So with SpaceX only offering around 5% of shares to the market, this is expected to result in a weight of just around 10 basis points in the Russell and the CRSP indices. This NASDAQ, that's going to be a bit higher. They plan to give it a weight of roughly 30 basis points. And then the S&P has strict profitability requirements, so the inclusion here is still TBD. And just for reference, Tesla actually took about 10 years to be added to the S&P 500 following their IPO back in 2010. Now, looking ahead to this week, SpaceX and tech are going to continue to be a focus of investors. However, the economic news will be around the FOMC meeting. This is newly appointed Chairman Kevin Warsh's first meeting. And while the markets are pricing in a near 0% chance of a rate change, investors will be hanging on just about every word during his first post-meeting press conference. That'll do it for this week. I want to thank you for watching. If you enjoyed the video, please feel free to like, share, and subscribe. We'll see you next week.